US stocks hit fresh record highs after US inflation data reassured investors the Fed will cut next week, with more to come later in the year. Australian tourism rises, but visitors from China aren't back at pre-pandemic levels. That's coming up in our 5 Things in 5 Minutes on Friday, September the 12th. And then in our deep dive interview, ANZ Senior Asia Rate Strategist Jennifer Kusuma analyses Indonesia's worsening fiscal situation.
A lot of concerns have been raised, including from rating agencies, Fitch and the S&P, for example, about the outlook of the budget.
But first, in 5 and 5 with ANZ, US headline CPI inflation was 0.4% in the month of August. It had been 0.2% in July. Annual inflation rose to 2.9% from 2.7%. But core inflation was unchanged at 0.3% and met expectations. Supercore inflation, which is the key measure of services inflation watched by the Fed and excludes shelter, fell actually a bit to 0.38% from 0.48% in July. ANZ economist Bansi Madhavani noted prices of household appliances and furnishings fell in August after rising earlier in the Northern Hemisphere summer. Here's Bansi.
That is giving us comfort that tariff-driven price increases are likely to be transitory. Core inflation does admittedly look to be sticky around 0.3%, but it is coming against a backdrop of weakening in the labor market. So in terms of what it means for the Fed policy next week, we continue to maintain that the data support a 25 basis point rate cut with a forward guidance about further easing. Our baseline forecast is that we will see a series of 25 basis point rate cuts, including a cut next week. What are the risks around our forecast? Look, given that some FOMC members supported a 25 basis point rate cut move in July and the labor market has weakened since then, there will be a discussion over a 50 basis point move at the next week's meeting, but a 50 basis point cut is not a central scenario.
As of 4 a.m. Sydney Melbourne time, the S&P 500 was up 0.8% and the Nasdaq up 0.7%, both new record highs on that confidence about lots of Fed rate cuts. The yield on 10-year US Treasuries was down 1 basis point at 4.02%. Gold was down 0.2% at $3,674 an ounce. West Texas oil futures fell 2% to $62.30 US a barrel. The US dollar index fell 0.2%, and with risk on, the Aussie dollar up 0.5% at 66.60 US cents, as was the Kiwi at 59.74 US cents. Number 2. Japan's producer price inflation fell only slightly in August to be up 2.7% for the year. ANZ Head of FX Research, Marjabeen Zaman, says the PPI is showing signs of stability as markets look for when the Bank of Japan might increase rates again.
When we think about Japanese inflation, Japanese inflation has been running around 3% for quite some time. And so it shouldn't be surprising if the Bank of Japan is hawkish or is going to be looking forward to normalizing its interest rates via future rate hikes.
Number 3. Marjabeen says attention now turns to the Bank of Japan's rates meeting next week.
We'll be closely looking to see what Governor Ueda says in terms of his future outlook and to see whether he's going to give a little bit of a hawkish outlook or a dovish outlook, and how much of the political uncertainty that's out there will get in the way or not. In terms of the political uncertainty, we have a date now for the next LDP leaders election on the 4th of October. One of the leading LDP candidates has voiced opposition to Bank of Japan rate hikes.
Number 4. Following on from our deep dive on Australia's services export growth this week, data yesterday showed inbound short-term migration up 12.8% in July from a year ago. Here's ANZ economist Sophia Angala.
Short-term visitor arrivals were around 13% higher compared to the same month in 2024. But short-term visitor arrivals in July were still running lower by around 6% compared to that same month in 2019. So the data is suggesting that the recovery in our post-pandemic tourist travel is still ongoing.
Number 5. Sophia says the key factor on why inbound tourism hasn't returned to pre-COVID levels is numbers from China are lagging.
New Zealand visitors to Australia have largely recovered to where they were hovering at around pre-pandemic levels. New Zealand visitors to Australia over the start of this year to July are down around 0.2% compared to the same period in 2019. But really the key highlight through that same period is the arrivals of Chinese visitors, which are down around 31% compared to pre-pandemic levels.
Sophia Angala there. Now, in our deep dive interview, ANZ senior rate strategist Jennifer Kusuma outlines 5 key issues to keep an eye on amid Indonesia's worsening fiscal situation, which has seen the finance minister lose her job.
I would say the news is not completely out of the blue, but the timing was certainly a surprise for markets. Now, going forward, a lot of concerns have been raised, including from rating agencies, Fitch and the S&P, for example, about the outlook of the budget. And the Parliament is currently in the middle of deliberating the final budget for 2026. We are still expecting the announcements this month, possibly by the end of the month, but it will be key to watch whether the protests and the change of the finance minister's position would result in any changes in the government's program, their revenue target that at a glance looks to us to be very aggressive, as well as the budget deficit target.
Now, in your note on the 5 things to watch in Indonesia, the budget is one of them, but you've also got the fundraising strategy for the upcoming year, which is announced around the budget. What are you looking for there?
So the government, following the release of the budget proposal in August, they announced a net bond issuance target for 2026 set at 750 trillion rupiah. This was larger than the expected range that we came up with, which was about 640 to 700 trillion, and much larger than the expected realization of about 580 trillion in 2025. So quite a big jump. And of course, the question then becomes who will finance this and how are they going to diversify their fundraising strategy. Bear in mind that out of that 750 trillion, some will go into foreign currency issuance. So again, this is a key to watch. We don't have the information yet, and the Ministry of Finance usually outline their fundraising strategy in November or December. Whether they will diversify into other instruments, the tenors of their bond issuance and the currencies of their bond issuance, that will really determine the outlook for the IDR bond market in 2026.
And then just walk us through the Bank of Indonesia's role in this. They're still undertaking QE and buying IDR bonds.
So Bank Indonesia's role in the local market, so in the FX and government bond market, has grown over the years, especially since COVID. But I would say even post-pandemic in 2024 and in the current year to date, Bank Indonesia has dominated the demand dynamics in the government bond market. They are not only the largest bond holder in the market, but they have also been the biggest buyer of bonds annually. So I have highlighted 3 things that we need to watch on the Bank Indonesia's side. The first is how much bond are they going to buy? This year they have announced 130 trillion realized in the year to date. They could be buying a bit more. In 2026, we have estimated based on how much the government is needing and the estimates of the demand from private investors that Bank Indonesia would probably have to continue buying bonds in the range of 100 to 200 trillion every year. The second question is Bank Indonesia recently announced that they are going to enter into a new burden sharing deal with the Ministry of Finance. This burden sharing deal was first introduced during COVID, during the pandemic crisis time. This time around, the deal is slightly different. They are going to share the burden of the interest costs that the Ministry of Finance has to bear when they are issuing bonds. I would say this is unprecedented. I have not seen this done in other markets. We are estimating about 5 to 10 trillion worth of interest payment to the government on the back of this deal on an annual basis. So this is about 5 to 10% of the estimated bond purchases that they're going to do. So look so far to be quite manageable. And the third thing to watch is how Bank Indonesia is going to intervene in the market during periods of balance of payment crisis, considering now that they have to defend the currency, support economic growth, as well as help lower the interest burden of government's fundraising. So at times, these different objectives could be at odds with each other. And very important for market participants is how they are going to intervene, whether they will prioritize FX market compared to bond, and so forth.
Jennifer Kusuma there. I'm Bernard Hickey. That was 5 and 5 with ANZ for Friday, September the 12th. Catch you next week as we get ready for the Federal Reserve's rates meeting. This podcast contains general information only, not investment advice. You should obtain advice for your personal circumstances before making any investment decisions. Please view the podcast disclaimer available via your media player or email.